Hi, Shante. Hello.
Hi,
Oh, hi.
hi.
You disappeared for a second there. Yeah, thank you so much for joining.
Thanks
I
for
see a
having
couple
me.
of people here, so I'm so excited for you to be on. So there's always something to talk about, credit scores and credit cards. So I'm really excited for this wonderful topic. A lot of people are
Awesome.
gonna benefit from it. So
Yeah.
why don't we start first? I know I met you, Christine Lucan, who was actually on my live stream the other day. But why don't we start with you introducing yourself first? Who's Shante and what do you do and all that?
So my name is Shante Nicole. I am the founder and CEO of Financial Common Sense. That's CENTS because what do we like to talk about? Money. So I'm trying to help people make sense of money. So I do everything from credit coaching. I do kids money coaching. I'm a public speaker. Of course, now that COVID is here, I'm doing a lot of things virtually. And I also have kids products where I'm teaching kids about financial literacy. I run a Facebook group with about 84,000 members going strong, and just really adamant about teaching people how to manage their debt, build their credit, repair their credit on their own because it's possible once you have the education to do it yourself, and building saving strategies and learning how to invest a little bit.
Great, great. We're gonna talk more about the financial literacy with kids towards the end. But
Sure, great.
first, let's start with like credit score. So, what is why don't we talk about what is credit score and how important is it here in the United States? I know it's very important, but it's like when me and Christine talked about it the other day, she was saying that yeah, Dave Ramsey said you don't really need credit score because if you have no debt, you don't need credit score. So I want to hear from you, like, what is credit score? How important that is?
Well, most regular consumers like us, we don't have Dave Ramsey money. So
Yeah.
when we want to make
Yes.
we want to make
Exactly.
big purchases, we have to finance. And the better
Exactly,
your
exactly.
credit, the better options you have at your disposal. You have
Mhm.
negotiating power. And so
Yep.
your credit score is basically determining your risk of
Mhm.
how
Mhm.
responsible you are with being able to borrow money and pay it
Mhm.
back. And so
Mhm.
a lot of people come to me and they join the group and they say, "Oh, I want to boost my scores to 700.
Mhm.
Help me, help me." And the first question I ask is, "Well, do you know what goes into calculating your credit score?" No.
Mhm.
No one really knows. They just want that
Yep.
high number and they just know
Yep.
that that's a goal to achieve,
Yep.
but they don't really understand it.
Exactly. Exactly. So actually, that's a good question. So, what if someone comes to you and said they have actually, what is a good credit score? So, what are the ranges and what's considered good?
Well, every few years it tends to change. Before, people were just happy with the 600. 620 used to be
Mhm.
fair. Now that's
Mhm.
kind of poor.
Mhm.
Everyone's shooting for 700. That's not even excellent anymore. That's considered good credit. So, you
Mhm.
have, they range from 300 to 850. That's the credit score range.
Mhm.
So you can
Mhm.
kind of figure out, in that
Mhm.
that spectrum where,
Mhm.
you fall. Again, everyone wants that 700, but right now
Mhm.
with bankers and lenders, they're like 700 is okay. Like,
Mhm.
but some people,
Yep.
they just, that's their goal. And so, yeah.
Mhm. Okay. So what if like someone comes to you, they have a 500 or like what do you usually tell them? They want to increase their score to 700. So how do you usually handle that question? Like or what do you advise them if they want to increase their credit score?
Right. So you and I can have the same score, but have totally different things on our credit report. So I tell
Mhm.
people it's not just about the score. The
Mhm.
history of your credit is just as important because
Mhm.
it's possible to have nothing negative on your credit and still have a
Mhm.
poor score, but it's possible to have a few negative things and have a high score. So I
Mhm.
tell them I can't give you the rundown with just knowing that number. I need to
Mhm.
see your entire credit history.
Got it. So, what do you think of Credit Karma? Like, I actually like with my clients, I use Credit Karma because it's free, and then there's different opinions about Credit Karma, but I feel like it seems like it's pretty good in telling you, what's high impact, breaking down why your score is high, why your score is low. So, what do you think of Credit Karma?
So lenders use FICO scores. Okay, so
Mm-hmm.
when you go apply for a home, a car, a
Mm-hmm.
credit card, they're using FICO. Credit
Mm-hmm.
Karma, also Credit Sesame, also
Mm-hmm.
Credit Wise, that's offered by Capital One Credit Card. They offer Vantage scores. So when we
Mm-hmm.
talk about how credit scores are calculated, there are five main components of how FICO scores are calculated, and they all differ, in percentages, how important they are. Well, Vantage has six components, and they're
Mm-hmm.
weighted so differently, and so I've seen anywhere from a 5 to 100 point difference between someone's Vantage score and FICO score. And so
Mm-hmm.
I just try to tell people Credit Karma is good for your reports. So if you
Mm-hmm.
have reports, and you want to check your Equifax and your TransUnion and see what's on there. But please ignore the
Mhm.
scores, because so many people have been heartbroken by looking at their scores on Credit Karma. They go apply for a car thinking they have a certain score, and they come back with a different score, and they're heartbroken. So it's just wise to just
Mm.
understand, it's not that it's inaccurate. A lot of people say, oh, Credit Karma is not accurate. No, it's accurate for the type of scores they offer. You have Vantage, you have
Mm.
FICO. So I don't never want to say
Mm.
it's inaccurate. It's accurate for what it is. But don't focus on those scores. No, I don't know any lenders that check Vantage
Mm.
scores for anything. So I just wouldn't pay attention to
Got
it.
it. So where can they get a free FICO score?
So a lot of credit card companies, if you are a consumer, they offer you
Mhm.
FICO scores
Mm.
as a customer, but you have to be careful, because I know we talk about FICO. People think they're just three scores because there are three credit bureaus. There are actually
Mhm.
28 different FICO scores. So you want to
Mhm.
actually make sure you understand, okay, they may be giving you FICO, but which FICO score are they giving you? Which one matters?
Mhm.
So,
Mhm.
Wells Fargo will give you a FICO score, Bank of America, Discover. That's those are free, of course, if you're a
Mhm.
customer. But
Mhm.
also, Discover has a website called free credit scorecard, not free credit
Mhm.
scorecard, and they will give you a free Experian score even if you're not a customer. So I think that's awesome
Mhm.
that they do that. You don't have to be a customer of Discover
Mhm.
to obtain that, but most otherwise you have to pay for it.
So is this FICO score like the TransUnion and Experian? Because like I thought Credit Karma they provide from TransUnion and Experian. So you're
So
saying even with TransUnion and Experian there's still a Vantage and a FICO score?
So let's differentiate between the credit reporting agencies and credit scores, right?
Oh, I
So
see.
there's
Got it.
three major credit bureaus:
Got it.
Experian, TransUnion, and
Mhm.
Equifax. But
Okay.
then the scores will come from all three of those, but it depends on the scoring model. So you have FICO
Oh,
scores that will come from those three. You have Vantage that will come from those three. You even have
got it.
even
Got
each
it.
credit bureau has their own scoring model, so it's always FICO. That's the way to go. So yeah, but
Oh,
they're all
got it.
coming from those three, but
Got
it's
it.
the different scoring model, and that's what's important.
Got it. Okay, okay. So like the bank, like if they provide a score, it will tell you if it's a FICO score or Vantage score. They will be transparent about that. Okay, good. That's good to know. Okay, so like tell us more like how can we use credit cards to boost scores? So it's like so if you have like for example you have a credit card that's been there for a long time, so it's advisable to just not close it and just leave it there and maybe just charge once a quarter, or like for example like people like I have clients who always say, oh, I have this like whatever 50,000 points offer. Do I just open, then close it later on? So, what do you think of all that strategy and how that impacts your credit score?
So when people, I get that a lot in the group, like, oh, should I pay it
Hmm.
off and close it, or I paid it off and closed it, and now they're like,
Hmm.
oh, my score dropped. So understand, let's go back to the foundation of what credit means, right? Again,
Yep.
it's showing a consumer, I mean a lender, how
Hmm.
responsible you are with borrowing money and paying it back. If you're just
Hmm.
opening cards, using and paying them off and closing them, you're unable to do that. Also, one
Yep.
of the components of a credit score is your length of credit history. They want to see
Hmm.
how long you've been able to do that. If you're opening, using, paying, and closing, where's your
Hmm.
credit history? So
Yep.
you want to make sure, and a lot of people are scared of credit cards. I understand. Maybe we were young, we got credit cards, we just shopped until we dropped, and then things
Hmm.
went into collections, and then we pay them off, and we say, you know what? No more credit cards. I'm done.
Hmm.
Because
Yep.
people are fearful because no one's been taught the proper way to use them, because they can actually boost your credit scores and really
Hmm.
um, allow you to obtain credit,
Yeah.
at the lowest interest rate or the higher limits, and things of that nature. So credit cards
Hmm.
are important. I will say the two top components of a credit score is payment history and your
Hmm.
utilization.
Yep.
Utilization is based on credit usage. So you can't show utilization without using credit cards. And that's a big thing that
Mm.
people
Yep.
don't know because they
Yep.
don't know how scores are calculated in the first place.
Got it. Got it. So is it that actually someone said that actually it was Vic who we were talking about credit score too last time. So he was saying that one of the good hack is actually to just call your credit card company and increase your credit limit so that way you will lower your credit utilization percentage. Is that a good hack to do?
It is if you have high usage. My goal for people is not to even have high usage in the first place. So we'll talk about my
Mm.
mantra when it comes to using credit cards. But let's just say you do. You're trying to work
Mhm.
on getting them lower. Yes,
Mhm.
increasing the limit will also actually lower your usage. But be careful with that, because every credit card company, if you ask for an increase, they're looking at you like where you can barely pay what you've already used. So sometimes they won't just give it to you because you asked. They know the benefit of
Mm.
asking, but they don't give it to you just because. They're going to look at your history with them, and
Oh.
they may say, well, listen, you're too risky. If I give you more, you may use more and then not pay me back. And
Ah,
so you have to
got it.
really be careful with that. But yes, absolutely asking for increases and being be careful because some credit card companies they will do another hard pull on your credit when you ask for that. You
Oh,
don't really want that. So be
got it.
mindful of doing research and seeing which cards will just do a soft pull when you ask
Okay. Okay.
for
But
increase.
then when you ask them to increase your credit limit, like, will they tell you if they're gonna do a hard pull or no? Oh,
They
then
just see
how?
it pop up on your credit report, and you're like, ah. So it's good to research. The
Oh,
information is out there. They just won't tell you.
I see. I see. Then how do you know then? Like, you just have to Google and research that? Like,
Google is your friend. Everything's on there. Everything's there. Yeah, and then
okay.
sometimes just like maybe I never Googled it, and then I asked for one, and I didn't see a inquiry. So I'm like, okay, they may be one of the ones that didn't. So a lot of stuff I learned by like just doing,
Got it.
like
Got it.
doing things. But
Okay.
yeah, but the information is out there. Yeah.
Got it. Okay. So let's say like when someone opened a credit card just for the travel points and then maybe they close it after 6 months and then like for example Southwest they allow you to open points and then you get like 50,000 points and they just let you close it and then you keep the points. Like how would that affect the credit your credit your credit score, and then is that a good idea to do, or do you just kind of leave it open when you open the credit card?
Again, lenders want to see
Mm-hmm.
longevity with your credit.
Mm-hmm.
If
Yep.
they see a lot of times you open close, because they can see the open date and close
Mm.
date on your credit report, so they
Yeah,
see
yeah, yeah.
open close, open close. They're like, I'm not gonna. How can I establish a relationship with you and possibly make money off you on interest
Okay.
if you're just gonna open close, open
Got
close,
it.
open close?
Got it.
Um,
Got it.
but yes, those credit hacks are amazing. Every single credit card I have gives
Mm-hmm.
me cash back or points, or I do
Mm-hmm.
have that Southwest card. But my thing is, do you only plan on traveling once in your life? Take
Yeah.
advantage of, because they don't only give you those points when you first get the card. You also get points as you use the
Yep.
card. So yeah,
Got it.
it's wise
Yeah.
to not open cards just to close them. There are
Got
times
it.
I do tell people to close cards. I know people are shocked to hear that, but there are times when I say, yes, please close that card. It's not benefiting you.
Oh, so when do you usually tell that to your clients to just close the card?
For two things. Sometimes you may have to open a secured card if you're trying to rebuild and lenders don't trust you enough to give you an unsecured card. So you get a secured
Mhm.
card, you're using it properly, you're paying on time,
Mhm.
and then over
Mhm.
time you're able to get two or three unsecured cards. It doesn't make sense
Mhm.
to keep a
Mhm.
card that you used really to just get you where you needed to
Mhm.
go. So
Mhm.
in that sense, I would tell you to close it. Or if you got one of those unfavorable unsecured cards that have like $79 processing fee or $99 annual fee or this
Uh,
fee, it's like, you know what? Once you've built yourself
yeah.
to where you want to go, just close that card. Yeah.
Got like couple $100 annual fee, and then it's like
Yeah.
they don't even use it and they just close it, right? Unless you really like, for example, there's like travel cards, like you use the benefits of the travel card, then maybe it's worth it. But if not, then it's like just close it. There's a
Absolutely.
lot of free cards that you don't have to pay annual
Right.
processing.
So once you
Yep.
start getting those cards, go ahead
Yep.
and close those cards.
Got it. Okay, so Kyle made a comment. I paid off all my credit card debt recently, and my FICO score went down. NB. I'm not sure what NB is. I have no mortgage or car payments. Like, I don't know. What do you think of that,
Okay.
Shante?
So quickly, I'll just run down because I keep talking about how scores are calculated, and I named two of the components. There are actually five
Mm-hmm.
components. You have
Mm-hmm.
payment history, your utilization. So again, you can't show utilization without actually using your credit cards.
Yep.
And
Yep.
then we'll talk later about the way to use them. And then your
Mm-hmm.
length of credit history. You have credit
Mm-hmm.
mix, and a lot of people are like, "What's a credit mix?" Well, they want to
Mm-hmm.
see
Mm.
revolving and installment lines of credit.
Yep.
So credit cards and then those loans, student loans, car payments and stuff, because the way you pay those are totally different. So lenders want to
Got it.
see, can you handle two types of credit?
Got
And
it.
then you have your inquiries. So if you have credit cards and you don't use them, or you don't have credit cards and then
Mm-hmm.
you don't have any a good mix, that's gonna
Mm-hmm.
affect your FICO score. And so just knowing those five
Mm.
components, you can look at your report and go, okay, I know what I need to do. Use
Yep.
my card, add a
Yep.
installment line of credit, those
Yeah. Yep.
things. So yeah.
Got it. Okay. So I guess Kyle, hopefully that helps. So maybe you just have a credit card and no other type of debt. So maybe that's why it went down. So just look at your credit report and then see what's going on there. And then you can always reach out to Shante if you have more questions. So so Shante, it's okay. So I know like you said so they have different type of loan, like a car loan, like revolving or with credit cards. So let's say car loan, they're done already after 5 years. So that's 5 years. That's quite a while of credit, right? So when they're done, then it's gonna drop off from their credit report. Like how like how bad, I mean, how does that affect the credit score when they're done paying their car loan?
So it doesn't affect, it stays on your report for at least another 10 years after you pay it,
Um,
because lenders,
got it.
they want, that helps you, right? So
Ah,
when accounts
okay.
are closed, they don't just fall off. They will stay,
Got it. Okay.
accounts closed in good standing. I'll
Okay.
give you an example. My husband had 6 credit cards and he had one car note. So that was added to his mix. Once he paid his car off, he had no more installment lines. His score dropped 40 points for one, because now his
Oh.
mix changed. Now he was able to rebound some of them because the cards that he still has, he's making on time payments and stuff like that. But because his credit mix
Ah,
changed, it's not because the account closed and now it's going to fall off. It's that it changed his mix. Now, say for
got
me,
it.
when my car got paid off, I still had student loans, so it didn't change my mix because I still had
Got it.
installments. So a lot of people are like, "Oh, um, another thing. I don't. If I have the money to pay off my car, but I don't want to pay it off because it's going to close and drop my score." And I'm like, "No, it's not. Unless it changes your mix. But even if it does, you're saving tons of money in interest." So I hate for people to really outweigh the credit score over money. Like saving
Yeah.
money should always be the ultimate goal. Even if you
Yeah.
take a drop, like it's okay. You're saving thousands of dollars in interest.
Got it. Got it. So that drop in 40 points with your husband, like how long did it take for him to recover that 40 points
Um,
again?
he didn't get the all 40 back because he never added another installment.
I
So
see.
he went from
Got
an
it.
814 down to like 780 or something, and now he's back at like 809. So like it will rebound. So don't
Got
fear,
it.
that. But if he
Got it.
adds the installment line, it will probably hike back up.
Got it. Got it. Okay. Okay. So it's the credit mix, and the two major credit mix is the installment with any loan, student loan, mortgage, car loan, and then the credit card, which you pay
Revolving.
up. So those are the two major credit mix, and you want to have at least one of them, like to kind of boost your
Yeah,
credit.
balance
Okay.
out. Yeah.
Okay, that's good. That's a very good advice. Thank you. So, okay, what is the best credit cards to start with when building credit? I know you're teaching kids financial literacy, so I don't know what you advise them on that as well.
Oh, I mean, adults too. Everyone, some of them are
Yeah.
just
Yep.
trying to
Yep.
build from scratch. They're like, I'm
Yep.
completely lost. I don't
Teenagers, like high
know.
schoolers.
Yeah. So the best cards to start with are secured. You'll be surprised though. There's some companies who will offer you unsecured cards, maybe with a very low limit, just to kind of see
Yep.
how
Yep.
you're able to manage it. But Capital One is a really good card to start with, and Discover. Those
Mhm.
are two amazing cards.
Mhm.
Discover gives you cash back, so it's a little harder to get than the Capital One. Capital One has
Mhm.
two cards, Platinum and Quicksilver. Most times when
Mhm.
you're just rebuilding and repairing, they'll offer you the platinum card because it really has no perks. It's just their base card.
Mhm.
Quicksilver gives you the cash back. So
Mhm.
sometimes it's once you get a platinum, you can upgrade to Quicksilver over time, maybe after 6 months to a year. But if your
Mhm.
credit is not bad, but it's good, it's fair, they may offer you Quicksilver from the jump. But those are really two good cards I always suggest people start with. You have
Mhm.
people trying to rebuild credit and they go apply for American Express and all in Chase, and I'm like, you're just starting. Please don't apply for those cards. You're not going to get them. So those cards
Mhm.
are definitely helpful for people that are trying to, you know,
Mhm.
rebuild. So then you have those other cards like Credit One and First Premier. Those are the ones with all those crazy fees. So
Mhm.
you may get it in the
Mhm.
mail and you may be tempted, but I suggest if
Mhm.
you're going to pay those fees, you may as well pay towards getting a
Mhm.
secured card.
Got it. So this Capital One Discover provides secure card.
They both they both supply secured and unsecured cards.
Okay, okay, got it. So what is the difference between secure and unsecure for those people who doesn't know?
So secured is when the lender will pull your credit and they say, okay, you're not bad, but I don't trust you enough yet to give you an unsecured card with a limit that you
Yeah.
can use up to. So
Yeah.
we'll give you a card. We won't deny you, but you have to put down some collateral. Okay. So you have to give
Mm-hmm.
us whatever you put down is how much your limit is. And so most of them
Mm-hmm.
have a $200 minimum. So you put down $200, your limit is $200. You use it just like a regular
Uh,
credit card. A lot of people confuse the secure card with the prepaid debit card. They think if they put
mm-hmm.
down 200 as they use it, it deducts and then as you pay
Mm-hmm.
it goes back. No, that money is put aside for you and it just
Mm-hmm.
establishes your credit line, right?
Mm-hmm.
So a lot of companies who have secured cards, they will actually unsecure your card over time. If they see
Uh,
your history and see that you've done well, they'll give you your money back and then maybe give you an increase. And now you have a nice unsecured card. There's
mm-hmm.
some cards who give secure cards and they don't graduate to unsecured. The only way to get your money back is if you close it.
Okay. So it's really secure card is like, okay, then you gotta have $200 worth in that savings or checking account connected to that credit card. So that way, if you don't pay for some reason 1 month, they'll just take from that $200
They
there,
won't
right?
take it unless you actually completely default on the card. Like you have to like months and months of
Uh,
non-payment. They close it. It's in collections. Then they can recoup some money. But it's not like if you miss a
got
month,
it.
they take from that. That's not what.
Oh, okay. So if you miss a month, then it will just go against your credit
It's like
score, and
just
then
like
okay,
a
got
regular
it,
credit
got
card.
it. Okay. Maria Ruth made a comment. The interest rate is high, though.
Okay, so let's talk about interest.
Mm-hmm.
Listen,
Yep.
I have 7 major credit cards. I use them every month. Shantae does not pay interest. Why? Because she uses it for money that she has. I
Yes.
tell people do not
Exactly.
use credit cards if you don't have the money because
Exactly.
anytime you carry a balance beyond the due
Mhm.
date, that's when you pay interest, right? Just like a
Mhm.
mortgage. Every month you
Exactly.
pay your
Yep.
mortgage, you have a
Yep.
balance, you pay
Yep.
interest. A car
Yep.
note. For credit
Mhm.
cards, people always say, "Oh, I don't want to get this card. The interest is high," and I'm like, "Why does it matter?" Most of my
Yep.
credit cards have high interest. I don't
Yep.
care
Yep.
because
Yep.
I use it and I have the money. So when it's due, I pay in full. I haven't paid interest in years, years, years.
Exactly. Yep, yep. So yep, Maria, I mean like interest rates shouldn't matter. You get a credit card so you can build your credit and also for many other things. So I'm actually a bigger fan of credit card versus cash or debit
Me
because
too.
credit card like there's just there's protection, there's like benefits, there's rewards, there's just a lot more benefits to it. And then like and I don't know about debit. Debit doesn't really build your credit score,
It
right?
doesn't
It
at
doesn't
all. No, it
yeah,
doesn't.
and then like yeah, so so anyway, that's me being not a Dave Ramsey fan.
No,
So
I listen. I don't use debit cards at all. I do not
yeah,
use debit
yep,
cards.
no, no, I
I use my
I
credit
don't.
cards like debit cards. Yes.
Yep, yep. I don't like debit card as well. And then cash, I use it only for places that require cash.
Right.
So then
Right.
you don't really have a choice there. Okay, so Maria, hopefully that answered your questions, and hopefully like you're using credit card just so you can pay it off. So treat it like cash, but
Right.
then like you just think like you're just paying that, but then you are gonna pay it off. If you can pay off every single week. Oh yeah, Shante, like is there value in paying your credit card every single week versus before the due date?
Not really, because the thing is, like we talked about usage, right? You have to
Mm-hmm.
be mindful of your billing cycle and be
Mm-hmm.
mindful of your due date, right? And
Mm-hmm.
so when it comes to helping credit cards helping build your credit, something
Mm-hmm.
has to report, right? So you have those people again who have credit cards, they don't use them. So every month nothing's reporting. That means
Mm.
no utilization is showing.
Yep.
Remember,
Yep.
the second highest component of a credit score is utilization. So if you're showing
Mm-hmm.
0 0 every month, your score is going
Mm-hmm.
to drop. If you have no credit cards, it's impossible. But you have
Yep.
those people who use them and they pay like right away the next week. And I'm like,
Mm-hmm.
well, the credit card company knows that you used it, but the credit bureaus don't know because you
Mm-hmm.
paid it off too soon. So I would just say wait until the due date. Like if you're gonna pay it, just wait because it gives it
Oh,
time to report to the credit bureaus. That's the goal. People use them
got
and
it.
pay right back, and I'm like, well, that's you're not,
Yeah.
and they don't understand, and so that's when we break down the whole
Yeah.
statement balance, and all that stuff,
Yeah,
and so
yeah, yeah. But Shante, what I noticed, like I depend on Credit Karma to show my credit report. So it will just say that it went down because my balance went up because maybe I bought something for $1,000, pay for something. So it says there because my percentage went up, so my score dropped. Then that's why I was thinking, okay, maybe it's better to just pay off before they report it, so your balance doesn't go up, so your credit utilization percentage doesn't go up, which will affect your credit score.
So let's talk about that. When I do my coaching sessions, I always end with that conversation because people are blown away when they find out about this, right?
Yeah.
So every credit card has a billing cycle, whether it's a
Mm-hmm.
store card, secure
Yep.
card, unsecured card.
Yep.
So you
Yep.
have a billing cycle. The thing to
Mhm.
remember is whatever the balance is when the cycle closes, that's
Mhm.
exactly what gets reported. So say for instance,
Uh.
you have $1,000 credit card, right? And you want to
Mhm.
show only 10% usage. So that's
Mhm.
$100. So
Mhm.
you went and
Mhm.
bought a couch. The couch was
Yeah.
$800, right? You don't
Yeah.
want to show 80% utilization. So
Yep.
what you have to do is check your billing cycle end date, and you say, I need to
Yeah.
make sure I pay this down to 10%, which is $100
Oh.
before that date. So that when
Oh,
it
okay.
will, so when you do that, say you paid $700, it brought your balance to 100.
Oh.
When your cycle
Okay.
closes, they're only going to report to the credit bureaus that you used $100. They're not going to say, no,
Oh.
Christine charged 800 first, and then she tried to hurry up and pay it. They're like, what's the balance when the cycle closes? That's all they care about. And so once that reports, then you have 25 days until your due date. Every credit card gives you about
Uh.
25 days. So then, like you said, So then if you never paid it down, it's going to report that 80% and your score is going to drop. But if you
Okay.
pay it down before the cycle closes, they just think
Ah,
you only used 100. So
got
it's
it.
going to
Got it.
report 100 and then never
Okay.
affect you. So I never go
Okay.
over 10% of any of my credit cards.
Got it. Got it. Okay. So basically, like, let's say the closing date is the 21st. It doesn't matter when the due date is, but you know the 21st is coming. So you just have to make sure that it's gonna be 10% utilization before the 21st. Like you're gonna
Right.
pay it upfront. Okay. Okay.
Now
So
you can go up to 30, right? Anytime you go over 30 for FICO is when you start to it starts to affect your scores. So I tell people don't strive for 30%, but like if you get to 30, don't like panic. But 10% is like
yeah.
and some people even say like 1 to 3%, whatever the percentage is, just stay under 30%. Like that's the best way
Okay.
to start
Okay.
utilizing. So if you only use 10% every month, then there's nothing to do. Just wait till your due date and pay it. But if you use
Got it.
more than that, like when I went on a trip, the trip was like
Mhm.
$2,500. I used my credit
Mhm.
card, but I made sure it was on a card that had a big limit, so it wouldn't even go over 30. So I didn't have
Got
to
it.
worry about. But if you have,
Got it.
you're just starting to rebuild your credit, they're only giving you a $300 credit card.
Got it.
Maybe you can max it out. Use it to pay your cell phone every month. But if
Got it.
that's going to put you at 50% utilization,
Mhm.
check your
Mhm.
billing cycle, pay it
Got it.
down before it closes. That way, that's
Got it. Got it. That is a really, really helpful advice. Thank you so much. So is it, do you do 10% utilization per credit card or as a total?
That's such a good question. I love when people ask me that. So, when you log into like Credit Karma or like
Mhm.
Discover,
Mhm.
that
Yeah.
dashboard will tell you your overall utilization is this. And people say,
Mhm.
okay, great, I'm under whatever. But
Mhm.
even if you max out or get close to the max on a single card, it
Mhm.
affects your credit score. Because here's the thing, you can have $100,000 of available
Mhm.
credit and you
Mhm.
can max out two cards and your
Mhm.
overall utilization could still be very low, but those two
Mhm.
cards are maxed out. So I
Mhm.
really tell people don't really concern yourself with the overall utilization. Really look at
Mhm.
the utilization on each of your cards.
Oh, okay, okay. So when they report it, so basically the FICO looks at individual utilization per card.
It
Oh,
weighs
got it, got it.
more. It weighs more. Yeah.
Got it, got it. Okay, okay. So basically, they have to use their credit cards then. If they have five credit cards that you just use it, maybe charge $5, $5. So there will be some sort of utilization in all those cards.
So you don't, and that's the thing too. You don't have to show it on every single card you have. I have 16 credit cards. Don't judge me, people. But no, I do. I have 7 major credit cards. I have like 9 retail cards. Right? FICO doesn't say I want to see usage across every card. You can use
Okay,
one card, but what will
okay.
happen with those other cards? They just sit there. You're not able to get your reward points. The credit card company may close it or lower your
Yep,
limit
yep,
because
yep.
they're like it's just sitting there.
Yes.
So for
Mhm.
me, I say if you can use them all for money that you have. But
Mhm.
FICO doesn't care if you use one or all of them. My highest credit card is $33,000. If I wanted to just use that for everything, and that's great, but all my other cards would just be sitting there,
Mm,
not
okay.
giving points, no cash back, no
Mhm.
airline miles. So I
Mhm.
spread them out. I use mine every month. Now my
Got it.
scorecards, I
Mhm.
use maybe twice a year. So people ask me, do
Okay.
you use those every month? No, I'm not going to shop that much to make an excuse to use my
Yeah.
scorecards. But
Yeah.
they're like more lenient as far as inactivity. So
Okay.
like, maybe my express card I use like maybe January, then June, and then that's it.
Mhm.
Just to show some activity.
Yeah.
But that I will pay off right away. I don't have to wait for that to report because I have 7 other cards that are already
Mm,
reporting. So I can use it and then pay it off like as soon as it
got it.
goes on my bill.
Got it. Okay. Okay. That's really good. Okay. So so when is it? Oh, I think you already talked about this. Okay. So okay. So what is this that you mentioned? You don't have to pay in full to avoid interest. So it's like, because what? So okay, if I charge $500, are you saying that I don't have to pay $500 to avoid the interest before the closing date?
Not the
Okay. What do
closing
you?
date. So anytime a balance carries beyond the due date, you pay interest. So that's what happens.
Okay.
Consumers, they run it up, run it up. They have a $3,000 card. They're paying the minimum every month. That means if you're paying the minimum, a
Yeah.
balance is carrying over to the next month and the next month and the next month. That's
Mm-hmm.
you have to pay in full to avoid interest because here's what the credit card
Hmm.
company says: you borrowed $500 from me, and I want
Hmm.
all 500 back. But if you don't have it, you can pay us $35. And consumers go, that's wonderful. They're not
Yeah,
doing
then pay
that
the
because
interest every single month.
exactly. They're not your friend. They're
No,
not
no,
doing that
please
because they
don't do
want
that.
to
Yeah.
right.
Yeah, so I have some clients who like, forgot to pay their interest, and that's actually a really big ding on their credit. So if you just miss one payment, you like at the minimum, if you can't do anything, just pay the minimum. But if they miss one payment, so how long does it stay in their credit report
So
or
you
credit
have to
score?
be more than 30 days late before reports. So don't think if you're 3 days late, it's like, oh my God. No, you might get a
Oh,
late fee, but they're not going to report it until it's more than
got
30 days.
it.
But
Got
that's
it.
stayed for
Okay.
7 years, guys. 7 years
Wow.
on your credit.
Yeah.
Now, here's the thing about FICO. They are good in this. The older negative items are, the less weight they start to hold on your scores. So if you
Okay.
got a late payment this year and then 5 years from now, it's still there, but it doesn't weigh as much as it did. So even with
Yeah.
collections, that's the same thing. Repos, bankruptcies. As it ages, it weighs less and less.
Got it. Okay. So how does collection weigh in your FICO score or credit report if any of your accounts went to collection?
So payment history, that's the number one component of a credit score. So there's several
Mm-hmm.
things that fall under that payment history. Of course, your on-time payments, a late
Mm-hmm.
payment,
Yep.
collections, charge-offs,
Mhm. Yep.
bankruptcies, repos, anything that shows your payment history, because that's what it is. Are you on time? Are you late? Did
Yep.
things go to
Yep.
collection? When collections hit your account, it does major damage. And again, the newer
Uh,
it is, the more risky you are. Let me tell you what happened to one of my members in my group. She had a
yep.
collection. It was 3 years old, so it was kind of starting to age,
Mm-hmm. Yep.
And
Yep.
she said, "My score, I was in 800s, and now I'm in the 600s. I don't know
Mm-hmm.
what happened. What happened?" I checked her credit
Yeah.
report.
Yeah.
Well, what happened was that collection was 3 years old, and
Uh-huh.
they sold it to a new company. So that meant it came off as the old one and showed up as the
Oh,
new one. 120 points she lost for that one collection. So take care of your stuff, people.
yeah. Wow. That's crazy. So, okay. So, like collection. So what about okay, I lost my train of thought, but we'll go back to that one. So okay, so are there any other hacks to improve your credit score besides the one you already talked about?
Yeah, so of course, credit cards. Use them, understand the billing cycle, understand the
Mhm.
due date, and understand, no interest, pay them off in full. Another thing that is awesome is that some people will say, I don't have a good credit mix. Should I take out a loan just to add an installment line of credit? Please don't do that, because people take out a loan for stuff they don't need, and they're using this money just and pay high interest just to show an installment line of credit. There's two companies. One is called Self, and one is called Credit Strong. They're
Mhm.
actually banks. And what they decided to do is, let's help consumers by reporting on their credit report as an installment line of credit, but they're not giving you the money up front. You're actually paying into it every month. And at the end of the term, you get it back. But the
Mhm.
when you pull your credit report, it doesn't look like, oh, Credit Strong. It looks like whatever bank that
Mhm.
they are partnering with. So that really looks good. So I tell people, if you want to build your credit and add a mix, don't take out a loan you don't need. Try
Yep.
Credit Strong or Self.
Got it. Got it. Okay. So actually, oh, I just remembered the question I want to ask. So what if like people let's say people have five credit cards, they have a debt, so they want to consolidate that, do a credit card consolidation. So how does that impact their score and their credit report?
Okay, so I get that question a lot. Should I
Mhm.
consolidate my credit cards? I'm in
Mhm.
over my head. I just want one payment, right?
Yes,
So
exactly.
my question always is, number one, if your credit is bad, your credit has to be in good enough shape to even qualify for the loan that's going to pay for that, right? Okay.
Exactly. For
So if two
any
thousand dollars,
consolidation, a good interest rate at least.
and I say
Yeah.
if the interest is higher than your credit cards, it doesn't make sense.
Yeah. Yep.
And
Yep.
if you can't afford, if you don't have good enough credit to get enough for the loan, then
Mhm.
it doesn't make sense.
Yep.
Another thing people do is balance transfer offers, right? So let's just say they say, okay, you can transfer your balance for 0% APR for 1 year. And
Mhm.
so it's like, if you have enough wiggle room to do that, it makes sense. But people fear it's going to max out that card if I do
Mm.
that.
Yep.
Once
Yep.
again, if you're saving hundreds and thousands of dollars in interest, I don't care about a maxed out credit card that has 0% interest. People,
Yes.
I'm telling you, they look at that 3-digit number and they will think about that more than wasting money. Don't
Yeah. Yeah.
ever out if that makes more sense. You're saving money for a year and you're
Yep.
paying
Yep.
no interest for a year. Even that
Yep.
card is maxed out.
Yep.
As you start to pay it, it'll go down. But guess what? You can't
Mhm.
get that money back in interest that you're paying, right?
Got it. Yep.
So
Yep.
it makes sense only if it's the interest is lower than the
Got
cards.
it. Got it. Okay. So you do recommend balance transfer, even though it might ding their credit score a little bit. But
Oh,
what about consolidation? Credit card like consolidating. Like let's say they have a good credit score. They found something maybe like I helped a client, like he found on lending club, it was like 11%. So that's still better than the 20%. So we consolidated. So how does that affect your credit score? Or, how does that affect your FICO, like doing that?
So it does it. So it adds an installment line, right?
Yes.
It has an inquiry because you apply for a loan. It's
Yep.
a
Yep.
small potatoes.
Yep. And then that get close, all your other credit cards
No,
get
they won't
close.
get no. They're
Oh,
just
oh, it
paid
would just
off, just the same way as if you paid them.
got
You
it,
just use the
got
loan
it,
money. So
got it.
what hurts it is if you stop using them altogether.
Oh,
But
got it.
also, what hurts is people do that. They don't have self control, so they consolidate and then they run the cards right back up. And then I'm like, so now you
Yeah.
have double debt. So you can't consolidate and not use them. You can't consolidate and run them back up. So you have
Yep.
to understand, be disciplined, use them the way we said, 10%. Pay it down if you need to. Pay in full when it's due, and
Yep.
do that. But most people don't because they haven't learned. They haven't really
Yep.
establish a good relationship with money. They just know they have a bad
Exactly.
relationship with money, but
Exactly.
they don't figure out what to do to not get themselves in that situation. So I
Exactly.
see it all the time. So now you got
Yeah.
$10,000 loan over here from your card, and
Hmm.
then now you have
Hmm.
$10,000 credit cards again.
Got it. Got it. Okay. So tell me more about, I'm really interested. Like, how are you teaching financial literacy for kids? Like, are you going to school? Like, are you trying to integrate that in part of their education? And then when you say kids, like, how old are these kids that you're trying to teach?
Oh, I've taught from kindergarten to college. So
Oh, wow.
the thing
Yeah.
is, I remember being 4 years old and asking my mom to buy me something in the store, and she said, "I don't have money." And you know what I told her?
Mhm.
You can write a check. Now I'm 4 years old. I don't understand what a check is. But I told her to write a check, meaning I knew that some type of transaction needed to happen.
Yeah.
And so I asked her to write a check, and she's like, "Yeah, it doesn't work like that." But she didn't teach me how it works. She just
Yeah.
said
Yep.
it's
Yep.
not the same as money. So
Hmm.
parents always ask me, when should I start teaching kids about money? I said the first time they ask you to buy them something, they know that it requires. I don't care if they're 3,
Exactly.
4,
It's not
5.
free.
Yeah.
Yeah. Yeah. Okay.
Yeah, and so I created some flashcards for kids. That was my first product for kids.
Okay.
Fundamentals of finance. What is a budget? What is economy? What is a credit score? What is a credit report? What is the
Hmm.
investor? What does
Hmm.
investing mean? What is the stock? All those just
Hmm.
basic things that they probably hear all the time that they don't
Hmm.
understand. So
Hmm.
that
Hmm.
was first. And then I created kids financial planners because guess what? We get paid. Sometimes kids get allowance.
Yep.
Sometimes they get
Yep.
birthday money. So they need to learn you can't spend all that
Hmm.
money.
Exactly.
If you
Exactly.
want
Yep.
something, you need to save it. Oh, you
Yeah.
want a PlayStation?
Hmm.
Well, save that money. If you go
Exactly.
blow it at the
Yep.
mall
Yep.
every week,
Yep.
then
Yep.
that's your money. So it's teaching
Yeah.
them now that you're earning how to
Yep.
budget, how to
Yep.
save, because
Okay.
that creates responsible adults.
Okay. But where are you teaching them though? Are you going to the school to actually like offer it through the school? Like how?
So people that work in the school system, they would ask me. So it's not part of the
Oh.
curriculum. They would ask me to come in and teach
Oh, okay.
certain
Okay.
classes. So
Yeah,
a lot
awesome.
of
Yeah,
people
yeah.
have like nonprofit organizations for like after school programs for like at risk kids or something. So I would go in there and teach there.
Mm,
But I've never like it's not part of the curriculum. But I'm trying to shoot for that because kids need to learn this all the time.
yeah.
Also, because since COVID, I've actually been doing virtual lessons with children as
Wow, that's
well.
great.
Yeah, like high
Yeah,
schoolers and stuff like that.
yeah,
And they
yeah,
love it. I share stories when I was their age about how I blew all my work money, from my first job.
yeah,
And, just say, don't be like Miss Shantae, please save your money. And so, but a lot of kids,
yeah.
they work, before COVID, they had jobs after school and stuff like that. And so they need to know,
Hmm.
like, it's
Yeah.
important. So, yeah, I teach from age 5 to college. Yeah.
Yeah. Michael Gomorrah said, "That's awesome. We need a rich dad, poor dad for kids." Thank you, Michael. Yeah. So actually, Shanti, like I'm actually interested because financial literacy is a passion of mine. I really want to teach more kids. So if I want to teach, like, the school, the students, like, how do I go about to do that? Do I just reach out to different schools to start offering that if I want to do it?
So it's really hard trying to just reach directly out to the school, because they have to meet certain standards,
Mhm.
statewide curriculum. So
Yeah. Yeah.
getting into the schools that way is kind of tough. You want to maybe pitch it as workshops. Like I'm doing 4 week, 6 week workshops, and they can do it as like a special. So some kids have art, they have music, they have
Yeah.
whatever. So that can be part of that. Not like it's not disrupting their regular academic calendar.
Got
And
it.
then I know a lot of people that work in schools, so they're always like, so I kind of had an upper hand in that sense.
Okay, okay. Yeah,
Um,
I don't know a lot of people, so maybe I'm gonna have to start looking into meeting more people like that. Because I just moved here to Las Vegas, so I mean, I love doing this, and I really want, I think that, it makes me sad. Like it's like if you don't learn financial literacy through your parents, if your parents are financially illiterate, you don't learn that in school. I mean, where are you gonna learn that, right? So that's why it has to start with school, and it just makes me sad that it's not by law required. I think that should be a requirement to learn about finance. We need money everywhere, and we have to learn to be responsible about it. And then with this credit card company, they have a lot of budget. The marketing budget is like charge, charge,
mhm.
charge. It's
Yep.
okay to pay the minimum. Who cares? And then they're gonna learn from the TV. Like it's so yeah. Okay,
Or
that's
they
really
learn
good.
from the mistakes they made, because most of my clients are between 30 and 60, and they're like, I'm still cleaning up stuff from years ago. And I'm like, why? Like,
Yeah,
why is, because the
yeah,
education isn't there. And it's not just for kids, adults
yep,
are educated as well.
yep,
And I found myself
yeah,
teaching my mom about credit. How
yeah.
am I teaching my mom about credit? You should have been teaching me, but nobody
I
taught her.
know.
And nobody taught her mom, and nobody taught her mom. And so it's
Yep,
a
yep.
vicious cycle, and we have to really break that.
Yeah. Yeah, it's very sad. I mean, like some adults get tired of being tired, but we want to try to teach the kids already, or even like in grade school, so that we didn't have to make that mistake anymore in the future. Yeah.
But we say that, but the issue is that adults don't know how to teach them because they weren't taught either. We just grow
Yeah.
up and just start figuring it all out. And so
Yep.
they're
Yep.
like, how do I even teach? And so what's interesting is last year I was on
Hmm.
4 podcasts, and I thought they wanted to talk about credit and all this stuff. And all of them asked me, I want you to talk to the parents about how to teach their kids.
Yeah.
It was so interesting. And I have like three
Yeah.
major things, and they like, wow, this is awesome. But most
Yeah.
parents don't know, and that's why they're
Yeah.
not teaching them.
Awesome. I love it. I love it. So actually, Shante, you have kids, right?
One. Mm-hmm.
Okay. So what do you think about chores, like in terms of like teaching your kids about money? Like do you pay them? Because like I have asked about parents, guests of mine, so they have different opinion, and I want to know what your opinion about that is, so you can teach your kids proper way of handling money. So do you think you should pay them or not pay them? Like how do you think parents should go about doing that?
Yeah. So one of the people who interviewed me, she was one of those ones that's like, I'm not paying my kids to do what they're supposed to do. But then after the podcast, she was like, okay, I need to start doing some of this stuff. So absolutely, yes. I'm not saying give them $20 every time they take out the
Yeah.
trash. But if you want them to start, if they don't have jobs, they're too young to work, and you want to start giving them responsibility, you have to actually give them responsibility. So not
Mm-hmm.
only should you pay them for chores, don't call
Mm-hmm.
it allowance, call it income.
Oh, okay.
Also charge them for bills. And when I say that, parents are like, what do you mean? Absolutely.
I love it. I
Your
love it.
kids probably use the Wi-Fi more than you do. So charge
I
25
love it.
cents a
I
month
love
for
it. Yeah,
Wi-Fi,
yeah.
a
Charge them
dollar
for their
for rent.
phone, their cell phone. Hey, they're using cell phones. They're young. It's like, hey, you better pay for that. That's not free.
Something really small, 25 cents for Wi-Fi, a dollar for, rent,
Yeah,
you know,
yeah.
um, 50 cents for electric, something small so that they know that when they get their income, that is not all your money. Because guess what? When
Hmm.
mommy gets paid, that's not all
Hmm.
my money either. I got to pay for this, and this. And so, yes, I always tell people if
Yeah,
you can, because some people aren't in a position to pay their kids for chores, but if
yeah,
you can, say, here's your income for the week.
yeah, yeah, yeah.
And say, okay, and then you use your little budget. Okay,
Yep,
I got
yep.
$10 this
I
week, so
love
I got
it.
to
I
pay
love it. I love it.
25 cents for this and a dollar. So now I
I
only
love
have
it.
$7. And now when you
Yeah,
want to spend, you don't have 10, you have seven.
yeah. I love it. I love it. So you don't believe in allowance. You believe in paying for chores for your kids.
Call it income.
Okay,
It,
okay. I like that. I like it. So actually I interviewed a financial therapist. I don't know if you know him, Brad Klon. So I asked him this question, and he thinks that if you pay your kids, like when they get to an age when they're teenagers, because he's dealt with a lot of teenagers, he said, well, they can start making money, then what they're gonna do, they're gonna rebel and said, oh, I don't want to do stuff at home anymore. I can make more money somewhere else. So that's why he believes in giving allowance plus paying for some extra chores that are harder. So I don't know.
right.
That's his opinion.
I agree with that too. I understand
Okay.
his mindset. My point is pay them.
Okay. Yeah.
Yeah.
So you do you still believe in giving them a little allowance, but paying for stuff that are a little bit harder, like
All I'm
or no
saying,
allowance?
so it's really just semantics, right? You can still call
Hmm.
it allowance and then say you're getting extra for harder things. You can say, here's your income, but you get a bonus for
Got it.
extra the harder thing.
Got
So
it.
it's the
Yeah.
same concept. I'm just
Yep.
saying when they start working, they're not getting allowance. They're getting income. Allowance sounds like, oh, mommy's giving me money, not like
Yes.
I'm not I'm
Exactly,
working
exactly.
hard for this
I love
money.
it. I love it.
You know.
Yeah, yeah. And also, Shante, like people ask, my clients ask me, like, should I save for my retirement or for my kids' education? I said, no, you should prioritize your retirement because there's no such thing as a retirement loan. And like you already spend so much money on your kids. I mean, come on, please prioritize your retirement, okay? So the kids, they have plenty of options, student loans, grants, they can work, they can go to school. And I work full time and went to school almost full time. I mean, like my parents didn't pay for my college. So it's
Mhm.
like so just just think about you first, and if you have any extra money, then maybe give them to them as a gift because then that will teach them to be responsible for their college, and then they won't take it for granted, because they work hard for it. I mean, like I didn't take my college for granted because I had to pay for it. I got a
Yeah.
grant, but then like it wasn't given to me for free. Like I had to pay my way through like a place to live and everything. So it wasn't given to me. So yeah, I love it. So I love your philosophy. So Shanti, it's like, how can people find you?
So they can find me on Facebook, Shante Nicole, and they can
Mhm,
also follow the group Financial Common Sense, CENTS.
mhm,
Instagram is at Financial Common Sense, and the public Facebook page is Financial Common Sense Inc. because we are incorporated.
mhm,
And yeah, I mean the group is amazing. It's like I said, it's 84,000 people. Don't let that scare you
mhm.
because we are one big happy family. People are not afraid to put it all out there. I mean, they join and I see so and so shared their first post and it's like this long with like all this stuff they got going on, but
Yeah,
everybody's
yeah.
so supportive, encouraging.
Mhm.
If people are rude, we just kick them right on
Yes.
out, so we don't play that. But yeah, it's just really to show, to get answers, to also
Mhm,
show others that they're not in the by themselves in situations, or you can repost and say,
mhm,
wow, I thought my situation was bad, but I
mhm.
see this person. So it's just really insightful, it's encouraging, it's
Yeah,
inspiring, and I'm there. I'm there. People always say, I never seen an admin so busy in a group before because I want to make sure people have the right
yeah,
answers.
yeah,
If somebody closes on a home, I'm right there, like, congratulations, so
yeah,
everything
yeah,
is really great. And
yeah.
so the group is like where most of my clients come from, and,
Mm,
most of my support comes from
mhm.
with my business. So I love it. I absolutely love it. I teach this because I'm a cancer survivor. I was 22 when I was diagnosed, went through a divorce, went through homelessness with a 4-year-old autistic child.
Wow.
Yes, a lot of
That is another topic to talk about. That's interesting.
and
Oh,
unemployment. And so
yeah,
I just said, you know what? I used to have medical bills and collections from chemotherapy and stuff, and I said I gotta figure out how to get out of this rut. So
yeah.
CNBC actually did an article showing that I paid over $50,000 in debt, over
Mhm,
some time, and now I have all these credit cards and no debt, well, no credit
mhm.
card debt. I still got student loans. That's another topic too. Um,
Yeah, they're pretty big. Yeah, some of them are
yeah,
like mortgages, the size of a
right.
mortgage.
Yeah, but
Yeah,
just from my learning experience and everything I went through, I understand now that it wasn't in vain because I had to go through that in order to learn and to teach thousands of
yeah.
people how to get
Got
out
it.
of that. So I
Yeah,
love it. So thank you so much
yeah,
for having
yeah.
me. I love
So wait,
talking about
your
this stuff.
yeah, so your Facebook group is like how many thousand members?
So on over the weekend, we just hit 84,000 members.
Wow, your Facebook free group, Financial Sense. Wow,
Financial
everyone, if
content.
you want to join. Okay, so Shante isn't, you're not on LinkedIn, right?
No, I
Okay,
know
so
I
okay,
need
okay,
to
yeah. So
do it.
I know like someone made a comment like, Aren't all your guests on LinkedIn?" I said, "No, not everyone." And it's okay. So everyone, Shante is on Facebook. She's a big Facebook person, so you can just find her. And then she said, "Financial Sense." It's a
Financial
huge
common
group.
sense. Common sense.
Financial Common Sense, CENTS, and then there's a free group with over 80,000 followers, members now. That's big. Wow. Do you have help with that? I hope you have help managing
My
that.
admins are amazing. I love them. They
Wow.
are, they are, and like I've never
Yeah.
laid eyes on any one of them in my life, and we're like a
Yeah.
little happy family. So they are
Oh,
so helpful. I just wish
yeah.
I could just go fly and meet them all because they helped me. Like I
Mhm.
couldn't do it without them. It would not
Yeah.
be CC without them. So
Yeah.
yes, I do
No,
have.
that
Yeah,
Yeah, that is amazing. Thank you so much, Shante. I really, really appreciate you coming in. And then, like, I'm sure, everyone has learned a lot. And I'll be converting this to a podcast so more people can hear it. So thank you
awesome.
so much, Shante. And then I know you have to go. You have you're a busy lady. So thank you for accepting this and then, teaching everyone about credit score. So
Thank you
have a
for
good day,
having me.
everyone. Bye bye.
Bye.